Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick. And guys, today we had another lifted day in the markets, another green day pushing up from the dip we had the other week. So everything, I guess, is all rosy and clear. But guys, this week is going to be a big week. We have major tech earning. We're going to list those out for you here in just a few moments. But plus, we got the FOMC on Wednesday. Now, they're planning, at least for probabilities, not to cut any rates this meeting, but the dialogue and everything during that conference will be listened to very closely, and the markets will react accordingly. But lots of information to digest this week. First up, though, let's get into the market summary board for today and see where everything panned out. We got the Dow Jones up 0.52%. Nasdaq actually was up 0.42%, up 107.74 points. A little bit of delay coming over with the feed from TradingView there, but SPX, the S&P 500, up 0.7%. U.S. oil down 0.82%. Gold up 0.69%. Reached another all-time highs. But guys, the brakes may be put it on for at least the near term. We're going to get into that chart here in just a moment just to show you what I'm talking about. Plus, we have Bitcoin recovering pretty nicely from a steep sale yesterday on Sunday. Is up 1.32%. So let's jump into the S&P 500 heat map, see where everything was. Now, guys, keep in mind, there were some decent movers today, which we're going to cover with Zoom, Net, Datadog, Trading Desk, as well as Symbotic. But really, everything quieted down around noon today. And the reason being is because, like what I said at the beginning of the show, we have so many earnings going on this week. Plus, we've got the FOMC meeting. So investors are sitting back, waiting to invest more capital and or waiting to hit that sell button. But today we had NVIDIA down 0.64%, Apple up 2.97%, AVGO up 1.5%, Google's up 1.63%, Microsoft up 0.93%, Meta up 2.06%, Oracle up almost 3%. Tesla did drop 3% today. But as we see there, the mega caps, for the most part, did a really good job. We're going to have earnings from GM, UPS, Seagate, Texas Instruments, and F5 tomorrow. Coming Wednesday, GE, ASML, Microsoft, Meta, Tesla, as well as IBM. Then on Thursday, we're going to have MasterCard, Caterpillar, Apple, SanDisk, and WDC. Guys, SanDisk and WDC have literally been off the charts, ripping higher. I'd be very surprised if we don't see some sort of profit taking, but equally, there's a lot of bulls involved there too. So it will be an interesting test nonetheless. All right. So S&P 500 today, you can see we had a big accomplishment. We did close back above this inclining parallel channel. So that was great. As the previous two trading days, we fought to get above. Today, we finally did get above. But guys, look at this as far as the inclining trend line where price has broken. We've talked about this in the show so many times. When price breaks these trend lines, price likes to go back up, tag that trend line, and then potentially make a new pattern, and then either fall from that point or put in a bullish consolidation and then go higher. You can see from this chart, though, getting above this parallel is actually a big first step. You want to see if you're a bull, price run up, tag this inclining trend line, chop sideways, create bullish consolidation, then get a bounce springboard effect off the top of the parallel. We'll see if that all happens with big tech earnings this week. Guidance is going to be key. The last quarter of earnings, guidance was what really made stocks sell off, even though they had great revenue and great earnings per share. The guidance is really what analysts are going to be paying attention to. I imagine a lot of tech earnings are going to be blown out of the water. But again, monitor the guidance that that company provides. Because if you look over here on the spiders, we've been making new all-time highs on all of these different days. But if you look at the Qs haven't made new all-time highs since back here in October. So guys, the Qs in tech have really taken some time off. So this can imply two different things. Either the tech play needs to catch up and start making new all-time highs, or the tech play is a little bit overdone. And so you can imagine that the last couple months, no new all-time highs, but maybe this week may change that narrative. We're going to have to see, again, what the guidance provides. On the Qs, currently finding resistance still right here at the $625 level. We've tagged it here on Friday and then slightly closed above today. But just beyond it, we've got another level of resistance at $628, or basically $629 tomorrow, as that will be the bottom end of this inclining parallel channel. Should we eclipse that, then we're going to be talking about new all-time highs up here near $637. Into SMH. SMH, also another index that was making new all-time highs, yet the Qs were not. Now, today we did have a little bit of a down day on the SMH, down 0.32%. Should this trend continue, next support's going to be down here on the 50% area, the parallel at $392.20. But yet, should we get a bounce up with this tech earnings this week, we're going to be looking at $430 roughly for the top of that parallel, both of which could be tagged as early as this week. Next up, the IWM. Now, the IWM's had a killer run in 2026, nearly straight up except for the last 3 trading days. But we were given insight on Thursday of last week, beautiful topping tail. And that topping tail, not only was it on the highs, it was right into resistance on this inclining trend line. And that did prove to be resistance strong enough to pull price back down on the IWM. Next support here at 262.48, followed by $258.25. And if the 10-year yield continues to fall as it has in the last couple days, then we likely will see some more upside on the IWM. Next up, we've got Bitcoin. Now, Bitcoin, guys, this is really kind of in the warning zone for Bitcoin. And we've been talking about this parallel channel for really quite a while and what price has done, how it interacts with this 50% area, the parallel. And I've really drawn literally parallels to what price action is doing here, to what price action is currently doing in the most recent history. It's replicating itself here on the charts. But back down into the daily time frame to see where the closer price action movements and nuances are taking place. We can see recently we've drawn this trend line from November low, connected over to all these pivots, and price has recently broken this uptrend. Since doing so, it's already retested this trend line and has since then sold off and gone lower. That's not a good sign. That's showing probabilities for now in Bitcoin are favoring more downside. Now, the next little bit of support is going to be at $84,000, followed by this pivot low in November at $80,500. Those are going to be the next levels to watch. If you're a bull on Bitcoin, you want to see both of those hold so that we can then re-attack this 50% area of the parallel at $94,000. All of which, though, needs to happen for Bitcoin to get above that trend line for it to become bullish again. As long as price is staying underneath that trend line, price is favoring more downside. And at least I remind you, too, the downside for Bitcoin could come down here at the bottom end of this parallel channel in between $65,000 and $70,000 should that play out. Next up, we see gold. Now, notice this beautiful inclining parallel channel on gold. And what did we do today? Yes, we made brand new all-time highs on gold, reaching 51.11 on the charts. That's $5,111 per little tiny ounce of gold up here on the charts. But notice what happened when we tagged the top end of that parallel. Sharp selling on gold, guys. We tagged it, came right back down, attempted to retest that area and failed. And look at that big 10-minute decline here on the chart of gold. So what this tells me, folks, is that right now there's still profit takers in gold. Even though we've been running up the charts as much as we have, right here at this top end of the parallel is another great place to take profits for gold, because I do anticipate after this big run, we should have some sort of pullback. Now, if you look at the charts, if you're a bull on gold, you want to see gold remain above this longer term trend line. Because, guys, is what I said earlier in the show, when price breaks out of a trend line, it likes to come back and retest that trend line. Well, that trend line is at $4,890. As long as price comes down and catches support off this trend line and bounces, then the bulls are in charge and we can go higher on the charts. Then we're going to be talking about prices trailing along the inclining of this parallel channel. But really, this is the key level in gold in the area that anybody, both bears and bulls, should be paying attention to, because if price stays above that, it's bullish. If price breaks beneath this trend line, it starts to become more bearish, and we could be talking about the lower 50% of this parallel. So keep a close eye on that level in the near future. Next up, silver. Guys, whew, what a rocket ship this morning silver was. If you see here on the 10-minute chart, look at it even pressing from Sunday. It just took off here on Sunday and continued moving higher. Look at this open at 9 o'clock, just right up on the charts, making a high up here at $117 before cascading down on the charts, creating what appears to be a daily topping tail on the chart of silver. Now, again, guys, when price breaks out of trend lines, likes to go back and retest them. So first area support down here at $89.38, followed by what I think is the ultimate destination for silver when the selling really picks up is this inclining trend line. Now, guys, this is a long way away currently, right around 65 bucks. But if you notice, this is a pretty sharp inclining angle. So there could be some jockeying around here, and we could very well eventually tag this support level on silver. By September of this year, it will be at 83 bucks. So just be mindful of that trend line. I do think that silver will eventually tag it. It's just a matter of when. So, but first things first, first level, a major level of support, just under $90 on the chart there of silver. Really fantastic move on that metal. Next up, we've got U.S. oil still struggling right here on this declining trend line. I can erase this one because we discussed that last week. So really this declining trend line from pivot generated back in December of 2023 still remains to be the resistance as it was all the way back here in October as well. Now, should we break through that, which we've put in really nice consolidation under this line, and consolidation under a resistance level often implies it's building momentum for a break to test the next resistance. That next resistance is up here at $62.66. Next up, Nat Gas. Nat Gas saw a beautiful pop last week and then subsequent decline, followed by another nice pop today. Great move up on Nat Gas, up 5.3%. Next resistance I see on the chart is at $4.04, while the support is down here at $3.40. With this continued move, I'd expect us to tag this 404 level as early as tomorrow. Next up, we've got NET. Now, NET had a beautiful day today, up 9.17%. Yet it was up higher, as you can see here with this wick. It was up here near $194. Now, there's been several analyst upgrades, plus there was partnerships with JD Cloud signaling a deeper push into the AI sector for NET. So investors were excited about that. But if you're a bull here on NET, you got to be watching this near-term declining trend line. If you notice too, this would be the third tag of this trend line on the next push. That usually is a place that gets rejected on the charts. Tomorrow, that's going to be around $197. So watch for resistance right there on that level. Potential consolidation could occur, which then would imply a breakthrough to the next resistance at 203.72. My main point of bringing this chart up is because these are usually some of my favorite plays in swing trading. Once we get a secured breakout, say if price does get above this trend line, you sit back, wait for the next resistance to be tagged, and then also put a reminder down here on this declining trend line for when price to come back down. Buy it then, and it's a springboard effect play, much like the springboard divers do in the Olympics. They take a nice jump as they break out, and then here on the second jump down here on the board, that's where they get their momentum for a push higher on the chart. So be watching this in the near future. It's something to keep on the radar, something to put an alert for. That way you can stay ready if a swing trade presents itself. Next up, Zoom. Guys, look at Zoom. Rocket ship on the chart today, up 11.28% on the charts. This is a new high since 2022. It's not their all-time highs, which is much higher on the charts, but nonetheless, a great push for Zoom so far. Zoom actually invested $51 million in Anthropic, which Anthropic created and is the producer of Claude. So again, a lean and push towards more AI tech, like with NET, has seen investors rejoice and push the stock up as we see here today. Now, today, what happened is two different breakouts. We broke out from this declining trend line, currently around $88.79. Then we broke out above the 50% area of this parallel channel at $92.85. Both of those levels will be support should price start selling off. The most aggressive level would be this 50% area of the parallel, more conservative down here on this declining trend line. For pullbacks, that could be a great buying opportunity to move up to the next resistance at $97.44, followed by $105. But notice we securely closed today in the top 50% area of this parallel, but we have not yet confirmed it. So let's see if we get a follow-up push tomorrow to confirm. Then that gives you the green light to buy any of those support levels, those two that I had mentioned, for further upside on the chart of Zoom. Next up, Datadog. Also, beautiful move today, up 5% on the charts, coming right into a very similar pattern. Same sort of pattern that's displayed right here on NET. So this is also another great potential trading opportunity. Watch to see what price does tomorrow. Do we break above the following day, do we confirm? If so, any pullbacks on this trend line would be buying opportunities. Now, this trend line value right now is $136.64. So keep that in mind if you are wanting to trade Datadog for a near-term swing trade. Notice if we push up and then come right back down, we'll be looking at $134 for an entry, and that could be a $14 pop there for the next resistance once that surge does come through. Next up, the trade desk, and a couple losers on the day. So the trade desk is down 7.5% today. Now, I've got this on the weekly time frame, so the candles don't look as big. But the reason I've got it is to illustrate just what a fall from grace the trade desk has had. Currently trading at $33.85. It was all the way up here around $140 not that long ago in December of 2024. All right, so I scroll back out on the charts, and if you notice this pivot back from December of 2018, connected over to the next pivot that occurred in the COVID lows, that's where price will likely have tremendous support on the trade desk. And you can see that trend line strung all the way out is roughly right about $30 on the chart. So be watching for if trade desk does sell off in the next few days or even the next couple of weeks, this $30 level should be very solid level of support. And considering how much it's sold off, I wouldn't blame you for starting to pick some up at 33 bucks, add a little bit more at 30, and then even add a little bit more at 27 for a pending bounce on the TTD. Now, TTD, a lot of analysts and investors are a little bit concerned with the change of leadership, but once that change of leadership cements and takes place, I imagine this stock should start catching a little bit more of traction, potentially pushing all the way up to this resistance trend line here at $49.55. In order to do so, though, got to be mindful of this declining trend line that's been tagged now 3 times from the most recent pivot high. Their price will need to break through that in order to get to that $49.55 target. Next up and lastly, we got Symbotic. SYM had a decent decline today, down 4.24%. I bring this to your attention because it is on the verge of a potential breakdown. You can see this at the bottom of the parallel channel is currently where price is. Should price break this level, the previous pivots at $56.99 will be the first support, followed by $48.58. Now, if we see a great sell-off in the coming days, notice we've got earnings right around the corner, February 4th for Symbotic. So that could actually give it the propellant needed to push up higher on the charts. Do we break down first, though? Watch these levels if we start breaking down before earnings, as these could be decent support levels to start inching into a position for potential surge off of good reporting. First resistance, once it does catch footing, is at $69 on the charts. All right, guys, as I said, a lot of earnings this week. This is going to be a fantastic week to be an investor. So happy to have you guys here. Make sure you keep posted. Stay tuned so that we can give you all the levels. Lawton's going to be going through all the earnings after hours too on the next 3 days. Can't wait to have both his show as well as mine giving you all the details. Don't forget to like and subscribe so you don't miss these shows. Plus, send them out to your friends and family so they also can benefit from these levels that we're giving you all. All right, thanks again for watching, guys. I'll see you guys next time on the charts. Until then, take care.